Hey everybody, Economic Ninja here. I hope you're doing well. I'm doing well, but there's a lot of things that aren't doing well. Guys, we're going to cover three big topics right now. We're going to cover lumber prices, where they've been, where they're going. We're going to talk about the Canadian banks that are doing some very gnarly stuff. We actually had a big outage in the Canadian banking sector yesterday. We're going to talk about that. We're also going to be talking about mortgage-backed securities. I love talking about them and the absolute epic rise of the cost of buying a house right now that we've seen the last 60 days and what the Fed is doing about it right now. Okay, so without further ado, because I have no special effects, let's do this. All right, so we're gonna start with lumber. Guys, lumber is blowing up in price. Now, if you remember, I did a story about this in November, actually the last week in November, and then I did another one the first week of December. Said, guys, get ready. If you have any projects right now, this is probably your best chance. Buy up some lumber, and because I see lumber going much, much higher. Now, ironically, I called lumber collapsing in price back in last year, this time last year almost, and I said it was going to happen in July and August. And there was a lot of people that saw me make that call. They saw what happened was most people just can't equate, though, you know, when they go to the lumber yard and they go and price out a 2x4, you know, what's happening that day at the lumber yard is different than what's happening on the stock market floor, and futures were absolutely collapsing. And I said, don't worry, it's going to translate to the lumber yards, and it did. We saw lumber fall, the wholesale and resale retail price of lumber fall drastically in late summer, early fall. But then in November, I called it again. So we got this story out of Seeking Alpha. It says lumber futures rally as unprecedented challenges prompt production cuts. Now, a couple of the things that they're talking about, they said that right now, March lumber futures are sitting around $1,300 for per 1,000 board feet. They're talking about how much it went up, but they're calling a couple of different things. First off, they're talking about the flooding that happened in Canada. That was absolutely tragic, took out some major rail lines and highway lines, so they were having a hard time getting the lumber from Canada into America. On top of that, you saw the U.S. decided to ramp up tariffs, and because they thought that was a good thing, and we saw prices go up from that, right? So that is one big issue. Now look at this, and this is talking about the floods. So you have the floods, plus you have the futures prices. But then check this out. We're going to go right here, the chart. So this is when I did that video right here in November. Right here, 28th it was. Right about there, 28th. That's when I said it's time to go buy some more lumber. Now look at what the price has done since then. Absolutely, it's been on a tear. If you look at a 1-year chart, it's nowhere near the peak, and ironically, I did that video right around here. If you go back in my videos, you'll see when I said, hey, don't worry, it's going to collapse, and it's going to collapse around July. And I said it's because people are going to care more about buying food and fuel for their cars, and those two items were going to go up exponentially, all right? And that's exactly what happened. But now what's very interesting is I am concerned, all right? This isn't trading advice, financial advice. If you're looking to build a house, don't bet on this. But I have a feeling that we're moving into some hyperinflation times as far as transitory hyperinflation, and lumber is one of them. If you see this V pattern right here, it lines up really closely with what we saw here. And I believe, though, this time, because of how much more sustained these prices have been higher, I have a feeling this is going to go past the all-time high, or at least this 1-year high. If you look back on a max chart, you look and you go, wow, this is unprecedented, right? But I have a feeling we're going to see even more bottlenecks in the supply chain issues, because think about it. Lumber is definitely a seasonality thing. We're coming out of winter. We're going to be going into spring, into the peak building season. And again, people are, mass mandates and things like that are coming out. They're finishing, so they're going to want to start living life again, right? So people are going to get back to building, remodeling, all these kind of things, and it's going to cause even more delays. And I believe you're going to see a much higher price because people are going to demand their lumber, and they're going to pay higher prices because they can't see the bigger picture, which I believe may end up over here around the $1,800 range, and then a collapse. Okay, so that's not trading advice, financial advice, but people have been asking me where I see lumber going. Okay, here's the biggest key takeaway from this. People go, what should I do? What should I do? I said, do you know that being patient and waiting is the most important thing we can do in life? Because this is actually called FOMO, the fear of missing out, the fear of not being able to build my house right now, not having my dream house. I want to live my life right now. You know what? There's times that you can just sit back and wait. And I'm going to be honest with you, that's in my life, every time I've sat on my hands and waited, it ended up being a positive thing. Some opportunities I missed, but those were far outweighed by the ones that I was able to take advantage of because I was being patient. So there's that. All right, let's move on, guys. Canadian banks. Cue the fire, Johnny Bravo. That's all I got. I don't have special effects, nothing like that. We're going to talk about Canadian banks. Guys, we saw an outage in the banking sector in Canada last night, and it had to do with their executive order, the first used of its kind. But this should be a clear wake-up call to why we need to unbank ourselves, like why it's important to have some cash in your possession, why it's important to have physical gold and silver coins in your possession somewhere. And if you got lots of money, like I know this issue, you're like, I don't want to store this much in your house, so you actually hire reputable companies, you can store it. There's all kinds of avenues, right? But then also cryptocurrencies, right? And people just don't get it, right? Because right now they're taking you on. How many people that own cryptocurrency have them on an exchange and don't have them secured properly on your own cold storage device, right? And so I'll put a link to this. I preach it all the time. I've got them all. I've got ledgers. I've got the Trezors. You know, Ledger's cool. I don't like the way they do their little buttons. I like this Trezor Model T, the newest one with the touch screen. I love that. An added layer of security with having to touch it physically to be able to get your trades to go through, or to move crypto. But I'll put a link to that. People need to learn this. Why? Because of things like this. So Canadian banks prepared to make unpersons of protesters at government demands. Sounds pretty scary, but the truth sometimes is. It says they're trying their best to keep donations from cryptocurrency or of cryptocurrency from helping protesters against the country's vaccine mandates. So they have seized actual wallets. Now, these wallets of crypto, before people go off half-cocked and go, yeah, see, I knew crypto was worthless. These are crypto wallets that are linked to FINRA, like government accounts, government accounts like banks and things like that. We'll find it in here. But it says right here, the government's new directive called the Emergency Economic Measures Order goes beyond asking banks to simply stop transferring funds to protest organizers. The government wants banks to stop doing business with some people altogether. Think about that. Think about what's going on right now. Wherever you are in the world, you know, guys, some things happened. A monetary experiment happened in Cyprus years and years ago. And they wanted to see how the bail-in rules would work if there was a country that defaulted on its debt, or, you know, there were issues there, or banks that were defaulting on their debt because they didn't have the money, and they did the bail-in rule. And certain percentages of everybody's accounts, money was withdrawn to pay the bank's debts. And almost every single country now has these laws in place, and it's very, very concerning, the lack of people that know these truths. And I think it needs to be put out there in a very serious way. And so if you're getting something out of this, if this is the first time you've ever heard of a bail-in, I know a lot of people know what a bailout is. That's what happened in the great financial crisis. Then do me a favor, do yourselves a favor, do humanity a favor, share these videos. Okay, this is very scary stuff. So this is why you need things in your own possession. It's called unbanking yourself. Like be your own bank. Get away from the financial institutions of yesterday and get into being your own bank. Stop borrowing money and become your own lender. Have a savings account. We'll do videos on that. All right, so the wallets that they froze were wallets that were going through government regulated accounts. Okay, so just don't think that they're just freezing, you know, cryptocurrency wallets. If you have an account with a bank that's being the custodian, that's one thing. Like if for a company, if you have an exchange, they could freeze those as well. Those are government regulated exchanges. So that's something very important. Now let's move on to this. Let's move on to the MBS market, because I think this is absolutely fascinating. First, let's talk about this, the 30-year mortgage. We're sitting right here on average 4.46%. And you know what's crazy is that people think that that's not that much. They go, Ninja, that's still historically low. It's still low. No, you don't get it. You see, in December, let's say the average home price in the country was, I'm just throwing this out there, $300,000, because that actually just jumped pretty significantly as well. But let's say it's $300,000. When you are paying $300,000 for a house and getting a loan on it at 3% mortgage, right down here, your mortgage is 3%, you are paying X. All right. Now I don't have notes with me. I didn't do a lot of preparing here. So let's just call that a $2,000 a month payment, right? And let's say out of that $2,000, $1,500 of that is interest. $1,500, okay? A month is going to interest. Now let's say you bought that same house for 300 grand, which probably isn't 300 grand in 90 days. It's probably worth more because we're in crazy town now, right? But let's just say you were able to buy the exact same house, but 90 days in the future to today, present day, 300,000, and now you're paying let's round it to 4.5%. So you're paying 50% more interest than when you bought it the first week of December. You follow me? Pretty easy math. Now, instead of $1,500, you're now paying, you take $1,500, you take 50% of that, which is $750. You are now paying $2,250 in interest. Think about that. If anyone thinks that this is out of control, they're correct. Does the Fed think it's out of control? They are correct. And you know how we know it is because they showed us the other day. Now, this is what's really interesting right here. It says the minutes, this is out of Mortgage News Daily, MBS Live Recap, no whammies in Fed minutes, geopolitics, or bond volatility, but there actually was, but it's very hidden. You see right here, it says the minutes themselves were entirely unremarkable for anyone paying attention to the initial announcement back in late January. Markets ultimately agreed after a brief spat of volatility. But what is very interesting is this. The Federal Reserve said that they were going to start quantitative tightening. They were going to start pulling back on the assets that they purchase. And right now, a couple of the assets they purchase are treasuries and mortgage-backed securities. Well, what they announced is that in the month of February, they will be pulling back and they will be buying less treasuries, but they are still buying the exact same amount of mortgage-backed securities. Why is that? I will tell you that I believe, this isn't trading or financial advice, I believe they're doing this because they know that the more of those that they can pull off the bank's balance sheets, the more the banks will lend and drop this price. See, the banks are actually raising this price. And what's even scarier is if you look at the 30-year mortgage, and let's just say, I don't remember if LendingTree is going to make me do a bunch of stuff, but in this actual scenario, if you want to pay anything less than 4.4%, I apologize, what you're going to find is they're going to charge you 1.5 to 2 points on those deals. So let's do a purchase. And they're not going to let me do it. I hate it when they're like, oh, we don't want to answer one question until you do. I just want to be able to look at the prices and get something for you guys. Here we go. And they're not going to either. So everyone wants to suck into giving your email. So we're not going to get that. But if you look on Bankrate or any of these sites and you're already logged in, you'll find that they are charging higher points. That means they are scared. They are afraid that if they loan you money today for that house is not going to be worth as much as it is today in the future. And we're seeing that getting priced in. That is volatility being priced into the mortgage market, which is totally separate than the Fed funds rate. Even though the Fed funds rate affects it, right now we are seeing a divergence from the Fed funds rate. All right, so let's do the Fed funds rate. It's flat, 0 right now, right? And mortgage interest, that is going up. It is completely diverging. So pretty exciting stuff. So I'm going to leave you guys here. I thank you so much for watching. The Economic Ninja is out.